Welcome back to Street Signs, everybody. What we are seeing here is an acceleration of the selling out there on the U.S. market. Let's bring up a board and show you exactly what is going on. The Dow is down by 210 points. It has broken below its 50-day moving average for all of you out there who like technical analysis. The Nasdaq is off by about 1%, and the S&P 500 is down by 21 points, or just over 1%. Let's get straight to Bob Pisani. Bob Pisani, are there any people down there on the floor of the stock exchange who are saying this is the kind of correction that I was waiting for? I'm a buyer.
Yeah, yes, we've been down on the Dow and the S&P. Dow is notably underperforming the rest of the market all throughout this year, although the transports are up and the Russell is up. So there's a very strange bifurcation in the markets going on. Let me just point out what happened in the futures, because it was very clear last night at 8:30. We came out with the futures up with Netflix doing well. And there you see at 8:30, markets dropped. We saw the Chinese manufacturing numbers weaker than expected. It accelerated at the open here today. European markets also were kind of weak, but emerging markets in particular put up the EEM. This is sort of the bogey for emerging markets. It's largely China, and that's down. That's down about 7% so far on the year. This is just an intraday chart. You see it's at the lows for the day. And then the global big international names here were weak on the concerns about China, and those were the material names, your industrial names, and financials, which have done fairly well this year, also on the weak side. Mandy, the Chinese economic numbers have been weak for several weeks now. I think this is the last little straw here for people to deal with. There was suggestions here consumer demand might be a little bit weaker than expected. The new orders number was very weak.
Yeah, and China's big, Bob. Obviously, PMI getting all the attention. I loved your graphic at the top of the show to show how futures dropped right when that number came out. You've been doing this a long time as well. Argentina in 2002, right? It got a lot of attention globally. It hurt us. The drop they're seeing in their exchange rate is the biggest since 2002. And I'm going to ask you to opinionate here, and you may say, hell no. But in your mind, is Argentina as big as it was back then, or less relevant but a headline?
Well, I think it's a little less relevant than it used to be, but still, when you've got a country that's as big as Argentina, when you start seeing the issues that you're getting with Argentina in 2002, they defaulted on the debt.
Exactly.
They are not defaulting here, but obviously there are concerns. No, obviously there are concerns, but they outright defaulted on the debt. And the repercussions are still being dealt with. There are still lawsuits around that default in 2002. A number of hedge funds are still fighting them on what's going on there.
Stealing ships.
I think a bigger concern is the Brazil and what's going on there. There's some real capital flight in that country because of the economic policies that they have been pursuing. And I think Brazil's a bigger country, and that's a somewhat bigger concern.
It is indeed. And for all those out there who've said that currencies are boring, they are not boring, because this is exact proof that they are worth watching, because what they do has huge repercussions. Look what happened to the Nikkei last year because of the weak yen, and look what happens now.
Or currencies are falling because the other markets are falling. Just throw that out there.
Or chicken or the egg.
Don't put the lira before the default. Okay, I will say this, to Bob's point, in fact, it's not getting a lot of attention, $285 billion in investor losses in Brazil in the last couple of years. $285 billion, not just Ike Batista, the Bovespa, the Brazilian benchmark index, down 7%. So far year to date. We're only 15 trading days into the year. And when you got a major, by the way, a nation that's going to be hosting both the Olympics and the World Cup in the next 3 years, down 7%, that's a big problem.
And a lot of this, by the way, not just due to some of Brazil's poor economic policies, there have been, but in fairness, the commodity market drop that we saw in 2013 really hurt them, because they're a commodity producing country. So there are a number of other factors. But you're right, they're under a lot of pressure now with some of the games that they're going to be putting on. And there's a lot of issues about whether they're going to be able to finish all the infrastructure that's necessary to put on those games.
Excellent point about commodities. And we have been focusing on mints all week, but we were focusing on Indonesia yesterday, which is one of the world's biggest exporters of a number of ore products. And what's good grief?
So I just noticed the Bovespa in Brazil. I was looking at a short-term chart earlier. It's down 13% in the last 3 months. On pace now for 48% decline for the year. I mean, obviously that won't continue, whatever it might be. My math stinks. Look at that.
Nonetheless, the point is, the point.
All of a sudden, yesterday we're talking about corporate earnings, and today we're talking about Netflix, the Turkish lira, their central bank, Argentina, and a possibility to default, Chinese PMI. Bob, are we missing anything?
No,
should we throw something else in there?
And who said globalization was dead?
I would note on the Brazilian Bovespa, I believe that's the third biggest component in the EEM. That's the emerging market ETF. So the big component are number one, China, number two, Russia, and number three, Brazil, and South Korea as well. So when you get the Bovespa down and the China market down at the same time, That's why the EEM, which is supposed to be emerging markets, is down 7% on the year. You get these two things together, and because of the weighting in there, it just brings it down. The problem with this now is what went back to that whole thing, and you had a great interview with Jim O'Neill. Because of that, all of these indexes that are emerging market are weighted to China very heavily, and so you've got the China-Brazil axis that goes back to that Jim O'Neill 10 years ago. We've got to find new ways to look. That was a brilliant little series you had on the mints, because that's new opportunities that are coming out that you've got to look at.
I love them talking
Nigeria
about
Nigeria. Love that discussion with Jim O'Neill.
Nigeria today, Turkey tomorrow. Bob, thank you so much.
Get away from the tyranny of China. Get away from hooking everything to China.
Bob, I'm not sure Nigeria is getting away from the tyranny of China, right? Ask Congo or Chad or South Sudan.
You know what I mean.
Mandy wore her Super Eagle green, the Nigerian soccer team, just for the show today. All right. Thank you very much, Bob. Great discussion. Love that. All right. Guy knows everything. It's unbelievable. All right. Let's bring in Wells Fargo advisor Scott Wren. Scott, thank you for joining us on short notice. What we did just there in TV parlance is called stretching.